Big money was positioning for a bullish move in the semiconductor name. It's an ADR, and they need a 15% move in the stock to make money. Now, the question is, do you trade it or fade it? Taking a look here at the chart of STM is the stock that we'll talk about today. And we saw some under market activity, and not some, but a lot, and we'll digest that in a second here. So taking a look at prices, they closed at $30, and I'll jump ahead a little bit. They are looking for a move of about 15% going into September and October. So they're looking at $35, which is a 15% move from where prices are right now. Now, this stock does move, and the last time we saw about a 15% move was back in February, when it went from this on February 3rd all the way to the new high and then rolled over and has rebounded. So this is a stock that can move and can get a nice bid underneath it and rocket ship higher. Right now, it pulled back a little bit and buyers have stepped in. So let's take a look here at the activity in the option chain. So this was a name that we picked up in July, and readers were able to take a 50% gain in the services that I offer on the specific recommendations. We followed early activity in the August 35 contract, and that was on July 13th or July 12th, and we sold them on July 13th. And this is where a lot of that open interest still exists. So as I have often discussed, when big money places a bet, they don't stop out. They make their bet and they let that play out. Today, we're seeing positioning again back into these 35 strikes. So this is what has me interested. We've seen it last month. It didn't pan out. And sometimes things don't pan out because the reaction is not what they expected. If it's something to do with a deal, sometimes M&A activity, deals from individuals that are not familiar how things work take a little bit of time. So there may be some birdies out there talking about, there's a deal could be coming. I'm not saying that there is, but this is the type of stuff that we typically see. So we see the positioning, and either they position too high, meaning that they buy the wrong strike, or they don't buy themselves enough time. So there could have been something on the table, and it could have taken a little bit of more time, and it could be now something that we're picking up again. They're repositioning themselves. So that's the interesting thing. We don't really know, but we do know that they are positioning for a move higher. These were bought. Over 112,000 calls traded today against 822 puts. That's substantial. And 52% of them traded on the offer. So this tells me, and I could see on the order flow, that some of this activity was two-sided. So those that try to follow unusual option activity alerted this. They got in, and some of them that are prop traders flip both sides. So we'll have to see what contracts stick here. But the first initial chunky buys were in the September and October. So those were for sure buys. Some of the other activity smaller that's positioning there. The only issue, as I mentioned here, is at the 35 strike. When we look at the delta here, the delta on the September 35 contracts is an 18. That means there's a 80% chance that by September expiration, these expire worthless. And when we look into the October, that delta is 25. That means there's a 75% chance. So these are very low probability bets, but as you can see, if they are right, their 40 cents or the $40 they spent per contract could double, triple, quadruple, depending on how it works. But again, that has to happen if there is something that happens that rockets that takes the rockets that stock higher, or some kind of news of a potential buyout or bidding war. Not saying that's the case, but just giving the wild card aspect to it. So the question is do you trade it or fade it here? Last month, if you held it, it's expired here. So what we do is we always manage our winners, and that's essential here. So we were able to get in and flip it and not hoping for the big home run. And that's where you have to look at this position here. Do you position by buying one and selling the other, buying the 30 and selling the 35? Or do you risk a little bit and be a little bit more speculative and you buy the 35? That's the question. Either trade it or fade it.